Look at how the Asian markets are faring this morning. Most of the indices on last check were trading with modest gains.
Truth Social parent company, which merged with a shell corporation in order to go public, hit the stock market under the ticker symbol DJT.
I think it starts with very proactive monitoring and then taking policy decisions quickly. I think in commodities, timing is the key.
The bull case scenario of Goldman Sachs is implying a 54% potential upside for Reliance Industries.
And well, Reliance is also making a move. Remember, we were talking about Reliance being in a bit of a cold storage and a slumber last several sessions. At least this morning it's woken up.
Until we actually don't move past this zone, I don't think you're going to see anything special.
We believe that, setting up the entire iron ore block and hitting commercialization would take approximately 3 years.
So I think you're seeing a bunching up of exits.
Total size of the deal was close to $151 million.
It's turned out to be a very strong Wednesday morning. The Nifty is up 150 points.
Now this year, we expect that with increased competition, this 12% volume growth may become 11% volume growth sort of.
Looking good for the markets. There's a bounce back. Well, the strong has only become stronger. It's turning out to be a very solid Wednesday afternoon. 175 points higher on the Nifty. Sensex up 600 points. Banks, though, have faltered a tad bit. That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me, Surbhi Upadhyay and Nigel D'Souza. Hi.
Hi, folks. I think, don't want to spoil the party at all, but I think some of this could be the year-end impact that we keep talking about in terms of funds just overall looking at NAV management and ensuring their cash levels are in sync with their investment philosophy. Maybe that's what's propping it up, that's what's helping it. But whatever it is, it's a good-looking screen.
Well, that's right. Today it appears it's more large-cap driven day because the outperformance actually is coming in from the Nifty. The mid-caps ain't doing as well as that. And the Nifty Bank, that's going to be the swing factor. The last 60 minutes, let's see whether or not it can pull itself back towards that 47,000 odd mark. That's remained elusive. And that plays out the weekly expiry as well. And, no big shakes actually in the broader markets because actually you have an equal number of stocks that are advancing as well as declining. The advancing line tried to get away, but that came closer to each other. And as you speak, it's all pretty much even Stevens.
Well, so the mid-cap index is only up 0.5%, but the small-cap index is up 1.3%. So there you've got a little bit of outperformance coming through, but the lines between the advances and declining stocks have converged. But let's then get straight to, how should you position yourself in the last hour of trade. Mitesh Thakkar is now joining in with the closing strategies. Mitesh, we've taken out last week's high, which is 22,180. Is that significant? Is there a trade that you would recommend in the last 1 hour?
I think, honestly, my worry is the lesser participation or the subdued behavior of the bank Nifty. That's not really participating. And on the Nifty, I think, 22,250 is the pivot. Not really far away from there. But I think, we still have some distance to travel. So on the stock side, we've been trading in long bias. But had the bank Nifty started, moving on the upside, getting past today's high of 46,950 zone, I think then we would have got a buy on both the indices. So while the Nifty is looking stronger, we haven't had a clean breakout purely because of the banking factor, which is not contributing on the upside. On the stock side, Steel Authority is a buy. Keep a stop at about 130. Look for targets of 142 here to begin with, and then maybe we can look at higher levels. And the other one which I like is Titan, which I would recommend buying with a stop below 36.90 for targets of 38.20.
Okay, got that. Mitesh, thanks very much. We'll come back to you for some more trading ideas. Just looking at the screen, the move on Reliance today has been really the highlight of the trading actions. A 4% surge on Reliance that's underway. It's almost approaching the 3,000 mark once again. That's a big mover. In fact, if we pull up the contribution chart, the bulk of it is really coming from this stock. But then you have the others as well. L&T, HDFC Bank, quite a few of the big boys, so the heavy hitters, they are all stacked up on the front part of the screen today. Auto is having a good session as well. So that's the large cap screen. It's been looking good. In fact, you don't have too many problem areas or concern points, barring something like an SBI. Big underperformer. And SBI is actually seeing quite a fall right now. Pull up the intraday chart on a State Bank of India. So there's a bit of a knock coming in on this one. State Bank of India. Let's get that up. Yeah, so that's the decline on SBI. We'll keep tracking all the action for you, but let's also focus on some individual stocks. Info Edge is on the radar as well. Rima, some brokerage commentary helping the stock?
Yes, so ICICI Securities today has raised the target price on Info Edge all the way almost to 7,000 rupees. 6,993 is the target price on Info Edge, and currently the stock is only at 5,500. So they're seeing a massive upside from current levels. There are three key reasons they're saying. One is that they are seeing an improvement in IT hiring as depicted or as evident from the JobsPeak index. And remember, IT hiring feeds into the Naukri number, so that's an important element. Secondly, they believe their real estate portal, 99 Acres, will turn profitable in Q1 of FY25. And third reason is they're holding in Zomato. Info Edge has a 13% plus holding in Zomato. Zomato stock itself has done very well in the last 6 months. It's up 68%. ICICI Securities sees a lot more upside in Zomato, and therefore Info Edge's holding in Zomato is also contributing to the increased target price. So 6,993 on Info Edge, that's the target, versus 5,500 that the stock currently is. Remember, Info Edge has also underperformed because IT hiring slowed down significantly. There was a marked deterioration in IT hiring. You know, companies like Infosys didn't go to the campus. The headcount for most of the companies have been falling on an aggregate basis for the last couple of quarters, and that's hurt Naukri's revenues. And Naukri gets more than 50% of its revenues from IT. The balance is doing very well, the non-IT, whether it's manufacturing, banking, but IT hiring slowing down had hurt Info Edge, which is why Info Edge was an underperformer. But now ICICI Securities believes that that turning point has taken place, and maybe this, the stock per se turns page 2.
Okay, that's Info Edge. Actually, quite a few stocks rising on the back of positive brokerage commentary. ABB is another one, and we'll discuss that in a bit. It's also up about 6% odd. So broker comments are really moving stocks on the street today. Look at that big move there on ABB as well. But first, let's kick it off with Info Edge itself. We've got Prakash Diwan joining in on the show. Prakash, good afternoon. Great to have you on as always. So, Info Edge, the rationale here is obviously their holding in Zomato simply gets a huge valuation boost up as well, right? We all know Zomato's been doing so well. What do you think? Do you like either Info Edge or Zomato for that matter?
Good afternoon, Survi. So you're right, Zomato on a standalone basis is getting the kind of attention deserving, so of course, that any company that's turning profitable would. It has, it's not only consolidated its position, the numbers that it can now start generating without much of competition taking away market share is very evident that operating leverage, which probably starts coming back maybe in another 2 quarters. And that means all your misgivings that you had around the stock in terms of valuation, in terms of its ability to scale up, all of that goes away. So from that perspective, I think Zomato definitely stands out as a clear winner. You could, of course, you could argue that it's done up quite a bit in the last 6 months. It's almost doubled more probably. And there would have to be some sort of a let up to buy into it. But Info Edge on the other side, the parent has lots of moving parts. And as Rima rightly explained, you still have to wait for IT hiring to come back. And it's just about another 8-10 days and we'll be staring at numbers from the biggies. So once quarter end numbers come through and you start feeling that there's some sort of a turning point that's evident in terms of the hires, then you know that there could be a change in the environment and that could eventually help. So don't be in a hurry to buy Info Edge. You'll get ample indications. This move in Zomato getting captured into Info Edge is already happening, and it's the smart money is already come into it on the back of that. But then it has to consolidate and wait for the core business to. So I wouldn't buy Info Edge at this point. Wait for some more time. But yeah, Zomato could be held on. Not again, as I said, bought into given the fact that it's run up quite a bit. But you will not at least face the risk of buying into it, even if you buy at 160, 170, as and when it comes down. It could still give you a very significant upside in the next 3-4 years.
All right. Hi, Prakash. Good afternoon. What about Gravita? I recall the stock around 150, 200 rupees. It's closer to 1,000 rupees, but Kotak believes it's got more in store. They're talking about 1,200 rupees. Your take?
Oh, absolutely. Good afternoon, Nigel. So you're right. Look at the way it has kind of delivered in terms of the promise it made. So when we spoke about it, it was 2022, and it had just started kind of looking at expanding. It reworked its business model without taking too many calls on the lead pricing itself, which earlier they used to do, and they actually got beaten, out of whack some time back on that. They've corrected that model. They've expanded into the right geographies. No, they are no more dependent only on 2 units. In fact, they have units which are very strategically placed close to the ports, some of them in Africa. They're also looking at expansion in Latin America. So, it's a model that's kind of now finally coming of age in terms of, what they know exactly what processes are going to be favorable and what is it that they need to avoid in terms of mistakes. I believe there could be much more. I mean, Kotak is talking about an immediate 20% kind of an upside, but my sense is if you hold on to this stock and the way EPR guidelines are kind of now getting implemented all across by all battery players, there's just much more room for this company to go. Of course, you'll have to realize that from 1,000, closer to 1,000, the risk reward is different than what it used to be at the sub 100 zones a couple of years back. But yeah, there is definitely some salience that still kind of can translate into the stock prices for the next year and a half.
Okay. Thank you. We'll come back to you for more stocks. In the meanwhile, BSE has released the list of 25 stocks that will be eligible for T+0 settlement cycle from tomorrow. This is an important milestone in the evolution of capital market. Yash joins in with the details on this. Yash?
Well, Rima, as you rightly pointed out, a very important evolution as far as, starting from T+5 to T+3 to T+2 and now T+0 is concerned. This was indicated by market regulator SEBI, and accordingly, the Bombay Stock Exchange now has made a list of 25 stocks public. Now, these stocks will be available for T+0 settlement cycle, and that will be starting tomorrow. All these 25 stocks, which you'll be able to see on your screen, are under the FNO category currently. These stocks will be available in the T+0 settlement cycle on a beta basis, and most importantly, this will be a voluntary settlement cycle available, which means if you want to opt for T+1, you can do that. If you want to opt for T+0 in these 25 stocks, you'll be able to do that starting tomorrow. Now, what is T+0 settlement cycle? It is nothing but essentially your trades getting settled on the same day as they're executed. If you're selling shares, then of course the money against those shares getting credited to your demat account on the same day. If you're buying shares, those shares getting credited to your account on the same day itself. Importantly, how will T+0 settlement cycle work? SEBI spelled it out very clearly. This will be done in 2 phases. The first one will be optional T+0 settlement cycle that is proposed to happen till 1:30 p.m., which means the trades under that will be executed by 1:30 p.m. On the same day, the settlements of funds and shares will be done by 4:30 p.m. So, which means the funds or the shares will get credited on the same day by 4:30 p.m. That is phase 1. Then we'll have phase 2, where a optional trade-by-trade settlement or an instantaneous settlement will be done for transactions or trades executed by 3:30 p.m. Once the trade-by-trade or instantaneous settlement comes into picture, then the phase 1, which is T+0 settlement cycle, will be discontinued. Now, how many stocks going forward will come into the picture? Of course, these 25 stocks are just the beta version. We'll have, about 500 listed companies as per market cap eventually coming into T+0 settlement cycle in the lots of 200, 200 and 100, and that will be as per market capitalization.
Okay, Yash, interesting development there. Got it. Thank you very much for filling us in. Really, technology making all things possible. And from T+0 to eventually moving to instantaneous settlement market-wide. I mean, that's the longer-term plan, which is to roll out perhaps over the next 12 months or so. Prakash, I mean, just any broad thoughts on this? Right now, this is optional. It's not mandatory. I don't know if it entails any further sort of, systems to be set up on the broker level side. Just your views. I mean, in any case, stockbroker stocks have been doing so well. Your thoughts on the way this evolution is playing out?
So, I think this is, a very clear sign of the market maturing, the systems kind of, as you rightly said, falling in place. There's so much of digital interface that you actually, now experience rather than, those physical delays that used to happen during the earlier years. But what does it do to the market? It just makes liquidity much more ample. You can actually, which means if you're going to sell as an institution, if you're going to sell a stock today, you can buy something immediately the same day, which is exactly what a good, healthy, mature market would always want to need. So this is definitely very healthy. But it's not going to make a difference in terms of pricing. But yes, liquidity will change for a lot of these counters. As Yash said, if eventually it be the top 500 stocks, which means the institutional play will get much more, seamless of sorts. Buying and selling of stocks without waiting to buy. So especially when you have a lot of news flow in two stocks, the one's positive, the other is negative. You don't need to kind of wait to sell one and buy the other one. So that's exactly where things could make a difference in special situations. But yes, it's definitely going to be very healthy from that liquidity perspective.
Prakash, what about Delta Corp? On a day-to-day basis, we come in there, irrespective of what the market is doing, this one just going south. GST, yes, has been hiked, and obviously they're trying to do their bit in terms of chips, trying to make up for that 28% by giving you the right to play for the 28 rupees and to win on 72 rupees. But what do you think? At around 115 rupees, do you think all the bad news is in the price, or there's too much uncertainty? You'd just rather leave it apart?
So I think there is definitely a lot of the negative which is built into the price. There's not much of a downside, and if you see what's happening on the ground, what's ailing them is they're the only listed players, whereas there are lots of other players in the space which have actually been setting up shop, building up very aggressively. In fact, in terms of market share, I don't think Delton would, within at least the Goa market, would probably be the biggest now. They have far more larger competition that they face. The only way this can kind of revive itself is if they were to expand into some other geographies, which could happen. Remember, as a country, we are moving towards internationalizing ourselves on a lot of grounds, whether it's a gift city, whether it's this talk about, the Olympics coming into picture sometime a couple of years later. And as and when that happens, a lot of these things actually start finding space. So if that were to happen, there's some visibility that comes out, some timelines that get drawn. You could see a little bit of revival because they have the expertise to be able to, the right to win in terms of market share. So I would believe that's a little bit away, but the downside is probably priced in. So people don't need to worry about saying whether the GST could still be. Of course, it's still hanging decision in terms of some court cases and all of that. But I have a feeling that the price probably will not kind of weaken from here on. You'll probably see some build on, which will be gradual. But it won't participate in this rally the way some of the mid-caps have done, given its own reasons. So you'll have to be really patient if you're holding it to see higher levels. But any fresh recommendation would probably not make so much sense, given that it's a very soft area in terms of growth going forward.
All right, interesting point you're making out there. They should look at diversification to another geography. As of now, they have another vessel that's going to be coming on board. And I think that's going to be one of the biggest vessels in the next 12 months or so. But they need to get exposure to some other part of the country. Maybe that's what could revive. But for the time being, clearly, the business dynamics are not working in their favor.
It's been a struggle for Delta for a while. Rima, you were saying?
No, not on the point of Delta. So I was just highlighting that JM Financial and IIFL Finance, both these have been in a free fall for the last so many days, more than 2 weeks. But today you are seeing a good bounce back. IIFL Finance is up by, I think, close to about 9.5%, inching towards a 10% gain. And JM Finance too has rebounded smartly and in good volumes, both these stocks. There you have it. I'm not too sure if there was some news at around 12:15, but both those stocks saw that, recovery in their stock price at the same time between 12 and 12:30. Prakash, one quick word on CDSL. Today, the stock is under pressure on account of the block deal, but this is also a big play on, it's a structural play on India's capital market growth story. You're getting it now cheaper. Would you recommend buying it?
Oh, absolutely, Rima. I mean, this is something which you only get into a stage of not buying if you feel that the capital market story in India is kind of going to be consolidating or getting into a stagnation kind of a mode, which is not the case. You'll be surprised the way there's a lot of work that's happening related to REITs and InvITs. There's a host of investors who have not yet participated in the capital markets because they probably stay away from stocks. But if they were to get some sort of fixed income options, some kind of annuitization, options within that listed space, there's no reason why that market cannot grow. And the regulator has been talking about it, right? So it's a very clear addition of a new product basket, which will draw a very different set of investors into the. And remember, somewhere in the middle of this year, we are also going to see a huge change in the bond market, given the fact that the Indian bond basket is actually going to be included in a lot of the global indices. What that does is it starts creating a second tier market for fixed income products as well. So as and when that happens, you can imagine what would be the situation or the size of the potential size of the market if beyond shares and stocks, you actually have fixed income products also getting listed and people start holding those in demat form. So there's much more that can happen. I don't think you can write this off. The company has already done its bit in terms of being right at the spot where the growth is coming. This block, these blocks are always an opportunity for long-term investors to enter who have probably not participated. I mean, you saw that in Mankind. It started soft, but look how it closed the other day when the block got executed. So this is something which is quite common. I would believe it still has a long-term trajectory ahead of it for years together. It's very secular, so no worries on that.
Prakash, finally, before we let you go today, just thoughts on the overall rally? I mean, would you ascribe any specific reasons to it? Because it's a nice, well-rounded green screen across sectors, across market capitalization. What do you think of the day?
No, it's a lovely day. We had seen enough red. Just trying to see green, given that Holi just went around the corner. And you have year-end, you have March end coming. You just have one more trading day actually, and you'll draw it. The curtains will be drawn on the year itself. Usually, we've seen there's a lot of cash that gets allocated rather than sit itself in banks to stocks, and that's exactly why if you look at the kind of stocks that are doing well are heavy weighted large cap stocks, which make a difference to NAVs and to portfolios and all of that. So it's a clear-cut allocation to be made, and then of course short covering accelerates the whole process. So I would believe this could probably even continue for tomorrow. But then April onwards we'll have to start watching the results screen rather than any of these technicals to figure out how the market should shape up.
Okay, all right, Prakash, thanks very much for joining in. Yes, the year has been a good one for equities overall, and perhaps the market wants to end it on a positive note as well. Thanks for joining in, and we'll look forward to our next conversation. Time for a break now. We'll come back on the other side, keep tracking this rally today. We'll also have Shribani Sarkar Kurian, Senior EVP and Head of Equity Research at Kotak Mahindra AMC, joining us on the other side. Welcome back. Here with us on Closing Bell, and it's a strong day for equities pretty much across the board. And as we've been telling you, lots of stocks are moving because of positive brokerage commentary. ABB is another such name that's been surging almost 5-6% higher, and this because UBS has struck a pretty optimistic note on the stock. Pamakshi is with us with some details. Pamakshi, tell us, what is UBS's rationale? What's making them positive on this one?
Well, absolutely, Surbhi. When we look at the note that UBS took out on ABB India, they're highlighting that the electrification and the motion segment are poised for very strong growth and in turn are expected to drive margins ahead for the company. Now, among several global players like Siemens, Schneider as well as ABB, there is clear focus on capturing the long-term growth potential in the electrification space. And in order to capitalize on this very opportunity, they are expanding the range and geographical exposure in low-medium voltage products. And what UBS has highlighted is that ABB is one of the best plays on the emerging infra scale-up in low-medium voltage electrification. Now, moving on to the motion segment, they appear to be quite positive on this one as well. They believe that the step-up in order inflow run rate is sustainable on an annual basis. The company is also expanding its capacity here, and therefore, the company's market share gains could continue ahead as well. They also believe that there is ample scope for ABB to deliver on profitability. They see more upside as far as Sensex is concerned on margins, despite the recent slew of upgrades that ABB saw. There is some near-term concern over short-cycle order fatigue, but they see plenty of scope to scale up new order growth across both motion as well as electrification segment. Now, keeping in mind all of these factors, they've gone ahead and raised their PAT estimates for 2024 and 2025 by almost 12% and 14% respectively. They've also raised the target PE from around 65 times to a peak of almost 75 times. As a result, they've given a massive upgrade as far as the target price is concerned, from 5,380 to 7,550 per share, and maintain a buy rating on this call. And on the back of this bullish note, we're seeing ABB surge in the trading session today.
Thank you very much for that. But the bullish note which has taken the market higher is none other than Reliance Industries. It's now a 4% gain on that, and it's just on the cusp of breaching the 3,000 mark. It's 2998.8 on Reliance Industries. It's not yet touched 3,000 even on an intraday basis so far, but that's the level we will be tracking today. Hormus joins in to tell us more why Goldman has raised the target price on Reliance to 3,400. Hormus.
Perilously close to its record high of 3024 is Reliance Industries, and that is coming on the back of this Goldman Sachs note, where it has maintained its buy recommendation. It's raised its target to 3400, as you mentioned, from 2925 earlier. But the interesting bit here to talk about is the bullish case assumptions that Goldman Sachs is making, and that assumption is projecting a potential upside of 54% for Reliance Industries by FY26. That comes up to a target of around 44.95 on the stock, and they're saying that the consolidated returns for Reliance are at an inflection point right now, and they are highlighting 4 key growth drivers that pertain to each of their businesses, and starting off with the telecom business, where they are expecting the telecom business to turn into a strong free cash flow generator, and it's expecting Jio Platforms to generate $12 billion in free cash flow between FY24 and FY27, compared to just under $2 billion that it raised between FY22 and 24. And it is also expecting an increase in ARPU for the second half of 2024. Now, the retail business, it's saying that it is entering a phase of steady state expansion and rising return ratios. It says that this 3 years of aggressive expansion from Reliance Industries has put it in the lead in terms of the offline grocery retail market domestically, but they are saying that the EBITDA margins won't expand from these levels for the retail business as the product mix is shifting towards groceries. Now, for the oils to chemicals business, they're saying that there is a multi-year refining outlook. The chemicals business has bottomed out, and Reliance has a leverage over the recovery in its petchem margins because of the cost leadership and the capacity expansion programs that they have undertaken over the last few years. And when it comes to the new energy business, Goldman Sachs says that hyper integration will drive higher returns for the stock going forward, and that the capex for the new energy business will be spread across 2 phases, and the cash flow that the current energy business is generating will be enough to fund the capex for the new energy business. Now, despite the run that Reliance Industries has had, Goldman Sachs says that the risk reward is favorable. It sees sustained returns over the next 3 years. There are multiple strong pipeline of catalysts going forward as well. Some key risks: lower than expected refining and chemical margins, lower than expected ARPU, and a lower than expected market share and margins for retail are some of the risk factors. But overall, an extremely positive note, and the stock is nearing a record high, top contributor to the Nifty upside today. Back to you.
Okay, all right, Hormuz, thanks a lot for that. That's the big heavyweight. That's punching it in for the bulls, and that explains why we're still holding with a gain of around 150 points. By the way, you have more number of stocks actually that are declining in comparison number of stocks that are advancing. So the crisscross line should come up for you on the screen. Let's welcome Shibani Sirkar-Kurian, the the Senior EVP as well as Head Equity Research at Kotak Mahindra AMC, who joins us on the show. Hi, Shibani. Good afternoon. Good to see you in as always. Well, what's your thought process? We had a bit of a shakeout in the mid and the small cap space, say 15 days or so ago. Do you think that's done? And what is your view right now? What is your preference between the large caps in comparison to the small caps?
Hi, Nigel. Good afternoon. So what we have been seeing in the market is that from an overall fundamental perspective, the key drivers for the market remain intact in terms of economic growth and GDP, earnings, which have so far been fairly resilient across large cap, mid cap, and small caps, as well as the flows, specifically the domestic flows, which continue to be strong. As we have been stating, is that what we are looking at from a valuation perspective, if you look at large caps today are trading at about 11-12% premium to their historic average multiples, while mid caps are trading at about 14-15% premium, and small caps clearly are trading at a significant premium closer to about 39-40% as compared to their historic average multiples. Also, if you look at the movement in prices that has happened over the last 1 year, for small caps and micro caps, a lot of that price movement has been driven by multiple expansion more than their earnings growth. And therefore, the expectation in that segment is of a significantly superior earnings trajectory continuing going forward as well. And from an overall asset allocation bucket, we believe that risk reward still continues to be favorable for large caps vis-a-vis mid and small caps, simply because of the valuation differentials that we were discussing.
Shivani, hi, good afternoon. So, you know, what themes, if any, fresh ones that may come to mind, and considering we had a bit of a cool-off in the broader market, did you manage to pick up any fresh bargains? I know we can't talk stocks, but just in terms of, you know, pockets which have started interesting you now.
So I think, Surbi, our themes continue to be more domestic in nature. We believe that domestic cyclicals continue to be better placed at this point in time. One factor that we are evaluating very closely is how private capex cycle starts to. As you know that from the infrastructure manufacturing space, a lot of the growth that has come through in the last few years has been driven by public sector capex, both central as well as state government. Incrementally, if you see signs of private sector capex picking up, that we believe will be a significant positive for the space. If you look at capacity utilization levels at a headline number, we are at about 74-75%. And if you look at the manufacturing PMI growth that we have seen in the fourth quarter so far, that is suggesting that capacity utilization levels are possibly inching up even further. So therefore, our belief is that anecdotally, the evidence seems to suggest that private sector capex should start to pick up as well. And therefore, from a theme perspective, the entire industrials, infrastructure, manufacturing space remains one which we continue to be positive on. Apart from that, the sectors that we have been positive on remain pretty much the same. So auto and auto ancillaries, cement, which is again a corollary to infrastructure and housing, and some of the larger private banks where we believe that valuations are favorable.
You know, just to follow up, Shivani, on this, I know you folks have been, you know, pretty much sticking to these themes for a while now, over a year and a half. I mean, the whole manufacturing, cement, and the capex play of it. The question is that do valuations still, you know, make you comfortable? Because a lot of these stocks on the capital goods side, for instance, or even power, etc., they've all rallied a lot. So if you were to put fresh money to work, are you still comfortable with capital goods valuations or some of these capex plays?
Yes, so you're right that the entire theme has worked very well. In fact, not just last 1 year, maybe last couple of years, and therefore valuations have become stretched in pockets. We believe that the runway for growth as such remains extremely strong. We continue to expect that the next leg of growth will come from private sector capex, and therefore that flowing through into various ancillary sectors which should benefit. We are mindful of valuations in pockets where, you know, the valuations appear to be stretched. But we do believe that there are adequate opportunities to play the theme. The theme is likely to be a multi-year theme rather than just a very short-term phenomena. What we also expect is that even from the public sector side, while there has been a lot of debate as to whether the government capex will continue, our belief is that post-elections, once the new government is formed, the focus will turn towards the budget. In the last few years, clearly what we have seen is that capital expenditure has taken precedence over revenue expenditure, and that is something that would continue. And therefore, you have a situation where both public sector as well as private capex should support the growth opportunity. And that we believe will be the key driver for the sector.
Since you brought up the subject of PSUs, there was this note that Nomura wrote on the Indian financial space where they met with over 30 institutional investors in Singapore and Hong Kong during their marketing trip for India financials. And they came away saying that they found increased interest for owning PSU banks amongst the long-only funds, which is led by confidence that the return ratios will improve asset quality continues to remain benign, and also the fact that the investors agreed that PSUs are better positioned in the current tight liquidity scenario given their lower loan to deposit ratios, lower LDRs. Where would you stand on the PSU versus the private financial debate?
Yeah, so that's an interesting question. So if you look at the banking sector today, I think the entire liability side is clearly in focus. We've known that liquidity has been tight and therefore deposit growth on an incremental basis has been lagging incremental credit growth now for 2 years in a running. And that's something that we have never seen in history. So therefore, banks which have better liquidity, better retail deposit franchise, and therefore the ability to grow loans out of retail deposits will be better placed. For the sector as a whole, you've seen that margins have come under pressure because your cost of deposits on an incremental basis have been moving up. And to that extent, in the near term, some of the PSUs, specifically the larger public sector banks and maybe some of the larger private banks also, which have strong retail deposit franchise as well as high liquidity coverage ratios will be better placed. So overall, when we are looking at the sector, we are trying to identify banks and companies which have a strong deposit profile, which should help them in terms of managing margins better in this current liquidity situation. Overall, within the pack, we continue to believe that the larger PSU banks as well as the larger private banks fare better in terms of growth valuation dynamics vis-a-vis some of the mid-sized banks where valuations have clearly now caught up.
Okay, all right. Shubhani, just hold that thought. As we speak, actually, the mid-cap index has moved into the red, and there are quite a few stocks that have moved low in the last few minutes. NBCC, pull up the intraday chart out there. That stock has seen a bit of a dive. You have, Pfizer that's moved a little bit lower. Bosch has moved lower. So quite a few stocks. Canara Bank as well has come in for some profit taking. So some money being taken off some of those stocks actually from the mid-cap space. Final question, Shubhani, what about the metal space? We had a technical call earlier today where Gautam Shah told us that he's expecting a big surge for metals. On the charts, it's looking very, very good. He believes that it's under-owned and they're going to come out of a phase of underperformance. Namely stocks like Hindustan Copper, Nalco, SAIL. How are you all placed on metals?
So Nigel, we have been underweight on metals as a pack, and that stance continues at this point in time. Globally, we continue to believe that growth remains a challenge, specifically so growth in China. We've seen many instances where there were hopes that there would be a policy push in China to revive growth. However, that has not come through. And from that perspective, we believe that this sector will remain extremely volatile and cyclical in nature. And hence, our stance overall in the sector continues to be underweight at this point in time.
Shabani, we leave the conversation here for now. Thank you very much for joining in. Enjoy tomorrow's trading session and then the long weekend. We will slip into a break. As always, on the other side, we'll get you a few BTST calls from our technical experts. Stay tuned. Welcome back. Let's get you an exclusive conversation now. Parikshit Luthra caught up with Tata Power's MD and CEO Praveer Sinha. Mr. Sinha went on to say they expect an 8 to 9% growth in power and energy demand during peak summer season this year. He also added that the great capex focus will be on renewable energy. Listen in to that conversation.
Like last year, or in fact last 2 years, the demand of power has been growing up. We have seen nearly 8 to 9% of growth in last 2 consecutive years, and this year also, both in terms of energy as well as peak power, we expect the growth will be about 8 to 9%. The summer has just started, and with the prediction that there will be a heat wave, I think everyone is gearing up to meet the future requirement. This year, the expectation is that we'll have about 260 gigawatt of peak power. Last year was 243 and the year previous was about 220. So I think you are seeing a huge growth in demand. Both in terms of energy also, there is expectation of about nearly 8 to 9% growth. I think we are all geared up for this. Government has taken huge steps. Section 11 has been imposed. That means all the imported coal and other plants also have to run at full capacity, and we are very confident of meeting the requirement.
Right. Now, in terms of the growth for Tata Power, how do you expect to finish fiscal year 25, and what is the outlook for the year ahead?
So, Tata Power in last
fiscal year 24 and looking ahead to 25.
Yeah. I think Tata Power has been very consistent in its performance. Last 17 quarters, we've done exceedingly well, and we expect that this trend will continue in future also. All our businesses are doing well. Our existing generation, transmission, distribution, and renewable also has started pumping in, and you would only see improvement in performance as we move on. Some of our new investments that we did in Odisha and Discom, the results will start coming this year and more so in next year. We'll also see some of our transmission projects getting implemented in FY25, and the results of that we will start seeing from FY25 onwards. Our renewable business, all our business, including our manufacturing, the new plant, this module plant has been commissioned and is operating at full capacity, and the cell plant will get operational in June. So I think all our businesses will start giving full results in FY25. FY24, the trend will continue as we have seen in the first 3 quarters. And I do expect that you will see very good sustained performance from Tata Power going forward.
Right. Now, in terms of deploying further capex, which are the areas which excite you the most, and where will we see the focus of capex in FY25?
So our capex is divided between all our existing business, but more focus is on renewable. Our new manufacturing plant where we have, which we have set up, the full capex will be completed over there, whatever is left out in the previous year. We will also see some of our utility scale projects and group captive projects coming up next year. And also we will start construction activity in a pumped hydro project. And the whole purpose is that how eventually we start giving 24/7 clean power solutions to our customer, whether they are utilities or they are individual CNI customers. And our focus on investment in future will be to develop more of 24/7 renewable power solutions rather than just setting up standalone solar or wind projects.
Right. Now, speaking about the forum where you are, India-US energy collaboration, what next steps can this partnership take to provide not just for India, but for the United States and for the world?
I think this is a great opportunity for us to work with US companies, US institutions, research labs of how do we meet the future requirement of power, especially when we are talking of decarbonization and also talking of the energy transition. And the 3 big aspects is that we need to ensure that the decarbonization of the hard-to-abate industries in terms of carbon capture, utilization, and storage takes place. New technologies in solar manufacturing, in storage battery solutions, new chemistries for that, and then some of the newer technologies in terms of how we can do cost-effective SMRs, the small modular reactors for nuclear power plants. How can we get some cost-effective solutions in alternate technologies such as nuclear fusion? So those are some of the areas that we need to work. How do we simulate studies to see that like it has been done in LA 100, which talks of 100% net energy by 2035. How do we simulate certain studies for India so that we have a Delhi 100 or a Mumbai 100 or a Bangalore 100, so that we develop scenarios whereby in maybe 2040 or 2045 we can transition to clean energy solutions in these cities.
So the government has come up with a number of incentive schemes for renewable energy, but if there were certain reforms or certain asks that you would have from the next government after the election to speed up our energy transition, what would that one key reform or intervention from the government be?
I think there are a whole lot of initiatives that the government has taken, but the speed at which we have to set up the projects has to get enhanced. And then the process of land acquisition, the process of getting transmission corridors and transmission evacuation, some of those aspects needs further improvement. Similarly, some of the regulatory aspects whereby decision taking can happen much faster. So I think while the reforms are there and directionally they are in the right direction, what is important is that the speed of implementation has to be fast.
Interesting conversation there. But let's get back to the markets. The Nifty Bank is not able to get that final flourish. For the time being, it's just holding with a gain of around 150 points. And we've got 17 minutes to the end of this contract. So let's see if there are any fireworks in store. For the time being, let's get in Mitesh Thakkar. Mitesh, what are the trades you have for us?
I think, the Nifty has slightly come off. As I said, I think, we are not yet ready to give a breakout. So I think trading should be more stock specific, and that's the way we are approaching it. The one stock which has come on the radar is Jubilant Foods. I think, that's an STVT because it's kind of come off from the important moving averages, turning negative there. So Jubilant Foods and STVT, I would suggest stop just above levels of 460. Look for a target of around 455 to about 442 for tomorrow. And on the buying side, I have a buy on Tech Mahindra, which is trading near the earlier support levels. So BTSC here with a stop at about 1245 and look for a target of 1266, 1270.
By the way, there's quite a cool-off in the market that's taken place. Look at this. We were almost tracking a 200-point gain. Now it's halved to just about 100 points. Midcap index is virtually flat, and the Nifty is now at 22,100 thereabouts. It's quite a swift fall that's coming from the top. Culprits, well, your tech stocks anyway were non-performers today, so they're still down. Then you have names like Reddy's, Hero Motors, some more selling over there. But yeah, I think just taking it a little easy now from the top.
Well, that's right. And one stock that's been a beautiful mover has been Maruti Suzuki. Out of nowhere, that stock in this year, in fact, it's up close to around 21%. It's, joined the 4 lakh crore market capitalization. And if I'm correct, I think there are only around 14 other companies that are more than 4 lakh crore or so. Maruti today also up close to 2%. It's come off around 200 rupees off from the high point of the day. But you pull up a year to date, we're just 3 months into the year, and that stock is up more than 20%. We're talking about a frontline Nifty stock that's up 20% in this year itself. Year to date is the chart that I'm talking about. Last 1 year, up 50%. Well, let's focus on a couple of stocks. Angel One, that stock is in focus. Remember, they announced at QIP. We have, Vamakshi, who's joining in to fill us in with more details on Angel One. Vamakshi, take it away.
Well, absolutely, you're right, Nigel. Angel One has launched a QIP. They're looking to raise somewhere around 1,500 odd crores is what our sources are telling us. Now, keep in mind that they had already obtained an approval from the board as well as the shareholders to raise as much as up to 2,000 crores. This QIP is coming in at a floor price which has been determined at almost 2,555 rupees per share. Now, when we compare it to the closing price yesterday, it is actually coming in at a discount of almost 7%. The issue price, however, is expected to be determined on April 2nd. Largely, the funds will be utilized for meeting increased working capital requirement, the exchange margin needs, and also the company is focusing quite a lot on business expansion. They want to scale up the AMC business. They've in fact recently invested in a wealth management subsidiary as well. And briefly in a press release that the company released a couple of days ago, they also said that they could pursue some inorganic growth opportunities in the fintech space. Analysts largely say that the company can plow back its quarterly PAT of almost 270 crores that we saw in the third quarter into the business. But if the company actually receives funds all at once, the pace of growth in the market share will actually be faster. So largely that is the news flow surrounding Angel One.
All right, thanks a lot for that, Vamakshi. Well, let's get in Mayuresh, who's joining us. Mayuresh, what's your view on the stock?
Afternoon, Nigel. Might be a little bit biased. Was there for a long time. But I think the kind of development that Angel One has been doing over the past few years has been phenomenal and exponential both. Phenomenal in the sense of both the digital ecosystem that they seem to have cracked as far as the retail clientele is concerned. And again, on the execution parameters itself, I think it's been a very smooth journey in terms of the number of clients that they have been adding over the past few months, and the pace of clients has continued at a very steady run rate. Having said that, as Vamakshi explained, I think the kind of fundraise that you're probably looking at is expected to be put in the right direction. There is a super app which is expected to come up. Obviously, I think the fintech part that the management is probably looking at is also looking very, very lucrative at this juncture. And assuming the expectations in terms of this capital put to good use, I think the return on invested capital for the raise that they have and the kind of deployment that can happen over the next few quarters can be substantial within the ecosystem itself. So I think the numbers are doing the talking for Angel Broking. Remain optimistic on this stock. Anybody holding should continue.
Okay, that's Angel One. Stock has done quite well in trade today. Let's take a look at some more movers and shakers. ABB, of course, we've discussed thanks to the UBS brokerage note. It's had a good session. Ditto for InfoEdge, another brokerage note helped propelling that one stock. Jyoti CNC, this recent listing has had quite a move. Again, about 8% higher today. And if I look at the week performance, week to date, it's up about 14%. So some of these smaller stocks, by the way, if you look at the mid-cap index, it's completely flattened out. But now check out the small cap index. So what's happening today is that the rally is not so much about the large mid caps. That was yesterday's trend. Today, it's moved beyond, and actually the smaller stocks are having a better session. That's what we are. Small cap index still retaining about a 1% gain. Jyoti Laboratories, another one, 4% on the higher side. By the way, look at Nuvama Wealth, 16% up on Nuvama Wealth. Let me ask you about this, Mayuresh. I mean, all the wealth managers and a lot of the broking stocks, they've been doing really well. You spoke about Angel. What's your sense on Nuvama, and also what are the valuation metrics and benchmarks that should be applied to these kind of stocks after this humongous rally?
Afternoon, Surbi. So I think if you go to the Nuvama site or any wealth manager site, I think the kind of dynamics that have been put forth in terms of the sheer potential over the next few years, I think we're all optimistic on the India story. But I think the kind of HNIs which will come up over the next few years and the kind of wealth management modules that will be required by these HNIs, super HNIs as well, and the category shift that we're also seeing, the higher middle class individuals moving into the net worth, higher net worth category as well. I think that paradigm shift is going to be a given over the next few years. So I think you will need experienced wealth managers to probably take care in terms of your asset allocation, having appropriate entries and exit across asset classes as well. Having said that, I think if you probably look at numbers, the kind of AUM growth that you probably are expected to see, extrapolate those numbers going forward in the next 2 to 3 years, there can be an exponential jump on that count as well. And surely going by all these metrics as well, you probably can assume that the kind of margin or the bottom line growth that can come through within this ecosystem that we are now speaking about can really, really do well. So I think this entire ecosystem, whether you're talking about exchanges, intermediaries like brokers, wealth managers, I think the India story continues to grow at a very healthy and good pace over the next few years. These guys will go exponentially as well. Maybe premium in terms of valuations, considering how the performance might have been in the last 4 to 5 years. But if you look ahead in the next 4 to 5 years, the growth can be exponential. And therefore, looking forward to FY25, FY26 numbers, I think greater numbers can be expected in terms of the bottom line growth.
More amount of participation in stock markets. Well, all these stocks could do pretty well from here on. That's the view coming in from Ayuresh. By the way, before we go into that break, the Nifty Bank is making a late surge in trade. That's playing a bit of a catch-up. It could be a weekly expiry-related factor, but that one spiked up, and now it's performing in line with the Nifty as well. So coming to the party finally, and just one more stock, Nava Limited. From the broader markets, that stock has seen a bit of an uptake in the last few minutes. So I think we should pull up the intraday chart out there. For the time being, though, let's slip into a short break, come back, and we'll wind down trading action. Stay with us.
Welcome back. So green is the color for the day, and we're seeing pretty good traction in many of these names. In fact, let's actually get you a market view on that note. We caught up with Gautam Shah earlier in the day to get a technical perspective on this market. Now, Gautam spoke about the current setup, the recent correction that we've seen, and how he thinks perhaps the Nifty's upside could be a little capped, but individual stocks in the broader market perhaps give plenty of opportunities.
Because you don't have too many stocks that are leading this market higher, which has been the problem in the last couple of weeks. Given the fact that you don't have too many big boys batting for the bulls, I don't think it's going to be easy for the markets to actually get past that 22,250 number. So I think we're going to stay in this range for some time. Some of these really top quality themes also add chemicals to it. I think we are reaching a point where the chemicals index could potentially see a breakout on the upside. So stocks like RT Industries, SRF could be potential beneficiaries.
Okay, so that's a view from Goldilocks Research. Mayuresh Doshi is still with us. Mayuresh, you tell us. I mean, we've been asking about plenty of stocks. Any ideas, anything that you've perhaps picked up in the recent broader market correction?
Yes, so I think what we like at MarketSmith is these real estate ancillary proxy plays. And to that extent, Pidilite is something that we are liking at MarketSmith India. Obviously, if you go by the numbers, Surbi, in the previous quarter, the volume growth was pretty decent enough at around 10-odd%. Standalone margins came in at around 25-odd% as well. Now, a large part of the expectations in terms of the adhesives and sealants market, specifically for the end retail consumer use, is around 55-58%. You've got construction paints and chemicals, which contributes 20% to the top line, and industrial sealants, which is 6-odd%. Now, all these three segments, if you probably look at the real estate cycle, the 6-7 year cycle that gets played out, we're in the third or the fourth year. The first couple of years typically is where the developers take a lion's share in terms of price action. After the third, fourth year, as more flats are delivered, as more inventory comes into the system, the home refurbishment theme starts coming through for the real estate cycle. And therefore, this entire expectation in terms of better volume growth expected for the real estate ancillary players is something that we are looking at. Pidilite, in our opinion, can continue to execute better in terms of volumes, top line growth, margin performance, and therefore a relatively better bottom line growth as well. There is input cost moderation that has taken place within the industry itself and is expected to remain at benign levels, which probably gives us a very good